So glad you could join us today on a Monday. Thanks for allowing us to be a part of your day. I'm Marlon Bowling, your tour guide to the Ag Commodities. Well, on Monday morning, let's see what we have to talk about by bringing in Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri. Brian, hope you had a good weekend out there. From your perspective, what are the markets going to be trading on here this morning, given what we did in the overnight trade?
Good morning, Marlon. Yeah, I did have a good weekend. Hope you did as well. We had a little bit of rain in Argentina over the weekend. That's why we're seeing some weakness in corn and soybeans. They have really not started any planting in Argentina for soybeans. They're well behind their normal pace, which should be about 20 to 25% complete at this time. Their corn planting is only 22% done, and they're normally about half done at this time, but they've been waiting because it's been so dry, and that is something that really bears watching. The forecast for Argentina is mostly dry here, but with the rains over the weekend, it kind of gives a little bit of hope that they'll get to resume their planting, and that did pressure corn and soybeans overnight, but it certainly is something that bears watching. South American crop is going to be vital to price direction, whether it's a crop that gets smaller from here on out and U.S. exports improve, or does it actually get as large as what is expected? Because we do expect Brazil to plant 105,000 metric tons of soybeans this year, which would be a monster crop if it is realized. And they are getting rains in Brazil. So I do think the trade believes that most of the yields are factored into corn and soybean prices now here in the United States. And so it gets down to demand for U.S. products as well as weather in South America going forward.
Well, we did have that update from the Climate Prediction Center last week that said they give it a 76% chance of La Nina maintaining its status until February. Then it may go neutral between La Nina and El Nino. And, that still gives us several more months here for it to possibly impact South American growing conditions. And usually La Nina is not great for them down there. We'll see. Let's take a look here at the overnight trade. As you mentioned, corn was under pressure. We had that December contract down 3 3/4 at 654 1/4 in that overnight trade. On our quotes provided by bar chart here, you had soybeans on the January down 5.5 at 1444 1/2. That's a lot of fours right there. It had been as high as 1455 1/4. Now let's check out what happened in the wheat market. Well, overnight it was interesting where we had Chicago under a little bit of pressure here. We had December down 3 cents at 810 3/4 per bushel. In the Kansas City market, we went the other way. December 6 3/4 higher at 950 1/4 per bushel, and in Minneapolis, we had December 14 higher at 959 3/4. Explain why we had the divergence between the three exchanges there, can you?
Well, there's a lot of intermarket spread trade taking place. The agreement with Russia to allow wheat exports through a corridor expires in another week. So there's a little bit of time left, and they're still negotiating. There's been no change in the stance, and that has traders worried that we won't be seeing a lot more exports. We're seeing a little weakness in Chicago as a result. That's one of our main exportable wheat products. Kansas City did move a little bit higher. So it's a lot of spread between the hard red and the hard red spring contracts, Kansas City, Minneapolis versus the short Chicago. So that's another news item that really bears out watching going forward in here. Some of the demand that's come into the marketplace has been for the milling wheat product that's Minneapolis. And so we're seeing actually a little bit better demand from that standpoint.
Also wanted to point out the cotton trade in the overnight session here. December was down, 260 points at 85.60. Another big mover in the overnight trade, the U.S. dollar value up 636 points at 106.800 on the December futures. We'll return in a moment. We'll talk more with Brian Hoops, and we'll talk livestock after this. Well, another significant mover overnight would be your crude oil trade, your West Texas crude. Let's take a look at what it's doing. And last check, we're down 128 points. That means $1.28 lower, with December now trading at 87.68 per barrel right now. That's off of its earlier high from last night by about $2.20. Quite a turnaround to the downside there. Now, reviewing where we finished on our livestock trade on Friday. We had the December live cattle down $1.55. We were at 151.52. February was down to 177 at 153.25 on the feeder cattle market. Here you had a lot of pressure in January. Goodness, down $3.12 on Friday to close at 178.57. The other months beyond that were way over $2 lower. So let's stop right there. Let's go back to the live cattle. Brian, we had the December futures around 151.52. Cash trade, from what I understand, kind of hovered around that 150 mark in the plains. Which one's going to blink?
Well, I'm afraid maybe the cash markets this week. The calls are steady to weaker after midday cutouts on Friday, and the closing numbers were all lower. The Packers lost a little bit of margin. They had a real big kill week last week, but that could start to slip as they start to kill for the Thanksgiving week next week. So we do expect the futures to come under some pressure. I'd look for the cash to be under a little pressure as well this week. We haven't seen the show list numbers yet, but it certainly feels like maybe the cash has kind of ran its course or peaked here for the next week or two, and it could have a little bit of a setback before taking another move higher. There's a cattle on feed report coming out Friday, and estimates I have look to be pretty friendly, lower on feed and placement numbers, again, similar to what we saw last month with a decent marketing effort, but we are putting a little bit of tonnage on these cattle. Our weights are 8 pounds heavier than a year ago, so that does slow us down just a little bit as far as making marketing progress. But overall, that number should be pretty friendly, should be supportive, but I wouldn't be surprised to see the cash markets, as I said, down just a little bit this week, and the futures weaker as well.
All right, let's take a look at how we finished up on lean hogs on Friday then. Now here is a look at those quotes here provided by bar chart. You had December down 52 cents. We were at 84.35 as we headed into the weekend. That was off of its high of the day by about $1.35. February was down 42 cents at 88.40. So what do you see driving the hog market here this week now?
Yeah, the hogs, you would think, want to look at the cash in some directions. There's been some reports that China's going to increase their imports of pork. If that's the case, I think they would come to the United States and be an aggressive buyer there. If that does happen, the demand for pork should be enough to support prices and keep us trying to move higher. But of course, these hog markets trade technically, a lot of the trade is done just from a chart-based perspective. And so if we can take out Friday's highs, no doubt there'll be some buy stops sitting there, and we should be able to move higher. But that's really the key, is what we can do with Friday's highs and lows. We take one out, that's probably the direction we're headed for the day.
And I know everybody's wondering what the Dow did overnight. Okay, let's take a look. Dow Industrial Average Futures down 76 points right now as we speak. The December contract is at 33,687. So that's the last look at our overnight trade as we get set up for today's session. Brian, thanks for the help. Always good to visit with you. Brian Hoops of Midwest Market Solutions. So Janet, the table is all set. Here we go. Buckle up.